Good day, fellow value investor. Well, you probably went to work today and some of your colleagues have been swinging their AI stock picks because they made a lot of money. Now, I'm sure AI will change the world, but the question is this a bubble and what's the financial investment perspective there? Today we'll discuss 5 stocks and 5 reasons why I sold my AI stock and why returns on investment are extremely risky and therefore this is a bubble no matter what happens. Let's immediately start. 1. If you want to increase your stock price, just mention AI. 3 years ago it was blockchain, now it is AI. Let's take a look at the first stock then, which is in this case Tesla. If we look at the market capitalization, 1.38 trillion, and then they are now transitioning from leading the electric vehicle, renewable energy industry, and now they're becoming an AI leader of robotics and related services. If you look at this is worth $500 billion, and this picture, just the picture, nothing more, is worth another $500 billion. Because if you look at Tesla and all the profits in history, it's still only promises. I asked AI, which is so smart and will change the world, to tell me what is the total cumulative profit Tesla has made. So they made 34 billion in 15 years. They got regulatory credit of 11 billion, thus $25 billion is the total. So Tesla is now trading at a P/E ratio of what? 50 on historical total cumulative earnings, not even current earnings. But yes, there is the promise that it will change the world. Well, we have recently spoken about investing and doing it, and if someone is promising you something for more than a decade and nothing has happened there for 15 years, you might rethink the person making those promises. And then another situation here, perhaps the representative business stock there, Softbank, enjoyed the dot-com bubble, crashed miserably, and then slowly and steadily they kept on pumping it up, especially thanks to Alibaba. And now AI bubble and everything related to AI is shooting up. But we have to also mention AI and the real economy. Let's discuss Nvidia, for example. If we look at the market cap, $4.33 trillion, the largest business out there. And yes, if we look at what they are sharing, what they are selling, well, everything is great, accelerating computing, everything will grow 1000x in the next few years. Demand is at an inflection point. Everyone is investing, therefore Nvidia will make 30% of the market in the next 4 years, 40% net profit margin, 140 billion, and then, okay, the P ratio will go down from the 50 to the, 25, 30, in line with the market, therefore Nvidia is now still cheap. And yes, it might happen, it will likely happen, especially if you look at all the projections of the hyperscalers spending here. So everyone is now spending 400, 600, 300 billion per year over the next years, which is their spending acceptance. But if you look at the real economy, like companies like the Dow Chemical, take automotives, Ford, Tesla Automotive, real business, it's going down because there is weakness in the economy. So there is this bifurcation between AI, bubble, stock markets, financial assets, and reality. Because the users of AI will cater to their customers. Their customers are mostly people that work. People that work, if they lose their job on AI, don't spend anymore, then you really don't have that much need also for AI. So there are always these business cycles that in bubble times nobody thinks about. At the end, 68% of the economy is consumption. How much does AI consume except for electricity? That's a question. Therefore, we have to ask ourselves, what is the return on investment on these huge investments? And we have yet to see what will be the true impact of AI. Will it be beneficial for society and markets in general, or it will take a long time to adjust? That's something we'll have to see. I think it will be volatile, that's for sure. Speaking of return on investment, hyperscaler, Amazon, Meta, Google, always light asset business models, Apple. So little investments, and now as they make money, now they are going into those huge capex investments. Spend 100 billion here. Others are announcing investments of 500 billion, a billion, a trillion. It's just trillions all over. So trillions on infrastructure. But what if you spend a trillion now and then in 5 years you can do the same with 200 billion? We know how it went with the internet. Costs of the infrastructure went practically to zero, of usage of data went to zero in 10-15 years. If that happens and you spend a trillion now, you will not make that trillion back in the next 10 years. That's a big issue that I see nobody discusses. Okay, some discuss. Sam Altman says, this is so crazy, it's so reckless and whatever. Okay, and we'll just be, let us do our thing. So some economists are saying this is reckless, etc. However, smart people get overexcited by a new technology. So it is poised to eventually have lasting impacts on the business and society. And are investors overexcited by AI? Altman's opinion is yes. You see, there is a lot of gray in this black and white. Is AI the most important thing to happen in a very long time? My opinion is yes again. And I agree with both yeses here with him. So very interesting. Someone's gonna get burned here, and that's what you want to avoid. On profitability, he expects the company to spend a lot of money, and they are doing, and they will see huge profits eventually. Huge profits eventually. You will eventually see something. Great sales pitch. Guys, send me $1 billion and eventually I will show you something. Might be my picture on a beach somewhere. No, I don't like beaches. On a boat fishing. Because that is the eventual. If you look at Microsoft, yes, it did great over the last 20 years. But let me increase this. For 16 years it did nothing. Remember here everyone was against Microsoft, boring old dinosaur, things like that. So we'll have to see what these trillions will be, who will profit most here. What if the cost is not 1 trillion? What if you can buy the same thing 5 years from now for 100 billion from China? That's the issue with technology. And everyone is investing. US 40 billion, China 140 billion investments. Holy moly, I didn't know they are investing so much. Zuckerberg will build their gigawatt centers. But then I again ask AI, are there competitors? And there are many competitors. What's the problem with competition? You invest a lot, you invest so much to keep up with competition, and then the customer says, okay, I can just pick whomever I want for the lowest price. Somehow now price and value doesn't matter, which again means we are in a bubble. So you can see many competitors here, and then also some are saying, okay, Bain here is saying there is at least an 800 billion revenue shortfall that threatens AI future, because they will invest 2 trillion but maybe make half of that in revenues. But look at the projected growth by Wall Street. From 43 billion this year, it will grow to 780 billion in spending in just a few years. 1 trillion by Morgan Stanley. They are playing that craziness, IPOs, money, investments, bonds, whatever. Bonds are at low premiums, thus it's cheap to get financing, billions of dollars in debt deals, and who is making money on those debt deals? Who needs to convince you that you need to invest in AI, you need to invest in everything? That's how usually things go on Wall Street. Nvidia is investing everywhere now, 300 billion on cloud, on Oracle for the next 5 years, 5 billion in Intel, just spreading everywhere, and then investing also where ChatGPT, so that they reinvest their money back and things like that. So those are interesting things that many say the bursting bubble is not on the horizon. Well, that's never on the horizon, because if you see it on the horizon, then it already burst. geniuses from Wall Street. And then everyone will spend 3-4 trillion, etc., etc. So computing deals, and that's now the mania, and as soon you announce, stocks go up. But compare 300 billion computing deal, the market capitalization, still their revenue is just 12 billion, nothing crazy. Speaking of bubbles, the cash flow yield is now low, extremely low. Compare that to the S&P 500 index cash flow yield of the dot-com bubble. We are somewhere there. Margin debt is spiking, of course. People that have disappeared after the 2021 SPAC mania bubble are now coming back because everyone is excited. And when you are excited, it's the best way to make money. And you know how most of that SPACs for retail investors ended. However, Chamath here says, don't invest your risk because you risk losing everything. Of course, everyone is so excited, so they don't hear that message. Nasdaq, we are here now. Similar to the dot-com bubble, it took a lot of years to come back. What is the risk and reward? Maybe this. Maybe we won't have a crash, but maybe it will be zero for a decade. You don't know. Maybe it will be positive, maybe it will be negative. That's just gambling. But Sven, revenues are huge, AI is huge, everything is great. Yes, and those have already made that money. So now, with these valuations compared to the Mississippi company, to the Dutch East India company, the South Sea company, adjusted for inflation from Visual Capital, very interesting to see where we are now. Because so much can happen. Just think of Nvidia 3 years ago. It was at 1/15th of the current stock price, and now it is here. In the next 3 years, so much can happen that you don't know. Maybe $1 trillion will be invested. Maybe next year everything will be cool, and 2027 less. Competition, growing, investments, making things cheaper, and then someone will say, oops, where are the big customers? No one has spent 10-20 billion on OpenAI. It's just us spending $200 per month. Profitability, we all use it. What's the entry price is the key question for those investments. Which leads us to strategy, and my strategy is always, you're eating food, not gigawatts tomorrow. Because I love my ChatGPT, I'm using it, so $200 per month, that's what I'm paying, and I'm getting more than 20,000 of value per month, that's easy. However, why would I pay 20,000? That's the value created, yes. But if not ChatGPT, there are others. Plus, something very important. When I ask deeper questions, it's not working well. I have to correct. You can use it for information, not for thinking. For thinking, I'm still smarter. Sorry to say that, ChatGPT. But for information, tools, things like that, finding something that it would take you a lot of time to find, yes. But to connect new things, you really see the emptiness because it's based on known knowledge. If you start digging a little bit deeper, then for now, it doesn't work as well. So you can get an advantage from it. You can get speed, you can get information, but not yet an advantage. That's how it is. And if ChatGPT says, Sven, pay 20,000, I will use something else. Speaking of my AI pick, I considered Alibaba a value investment here, and now it is a little bit higher, but the fundamentals have improved a little bit. However, this is too much AI bubble, and we don't know whether the 50 billion Alibaba is invested will be positive or negative in the next few years. So, as the model portfolio of my platform is, let's say, the poster child of my research platform, value investment research platform, I have sold it here. In the diversified portfolio, it is still there. I have to see whether I will sell it. It's the largest position now because it is more than double now, as it has doubled from when it was value. Alibaba has changed from a pure value margin of safety play, e-commerce, ecosystem, China, to another promise. They are doing well, but if they do well, then others might not do well. So that's the huge competition there. where I question the profitability of everything. I hope everything works out great. I hope you all make your money on AI and pension funds that are mostly invested in Nvidia now because it's the largest market capitalization, Apple and things like that. I hope it all works. I'll keep doing my 15% per year, the value investing way. Thank you for watching. This is why I will not invest in AI.